Hello guys and welcome to the moon. My name is Carl and I'm going to bring you this cryptocurrency video. So what I want to go through right now is something that I should talk about much more often, and that is risk management, because most of you, or at least many of you, are doing crypto trading, right? And I've seen that many new people are going into trading now, and I think it's definitely my responsibility to tell you about risk management. Now, if you don't even know what that means, you're in trouble. That means that you are gonna probably lose your money. So listen very, very closely right now. Let me start off by explaining, or by telling you a story about my friend who I talked with just a few days ago. He came to me and said, "Carl, I'm trying trading now and I'm doing pretty well, but there was this one day when my whole account was down 70% because I had one big position open." And I was like, "Wait, what do you mean? Did you have your whole account in one big trade?" And he was like, yeah. I put my whole account into one trade and I was 70% underwater, and then it came back up again and he didn't lose all that money. But I told him, this is a huge problem. You're doing it wrong. Never ever risk your whole account in one trade. This is should be rule number one in trading. Or actually, rule number one is don't put more money into your trading account than you can comfortably lose. This means that, for example, on Bybit or Phoenix or wherever you're trading, never put in more funds than you feel like, if I lose this, I'm fine. If I lose this, no worries. That will be very individual. But let's say you have $10,000 in the bank. I wouldn't recommend anyone putting in more than maybe $1,000 for trading, in my opinion, because, and I'm gonna tell you why in just a few minutes. But that's rule number one. Rule number two is that of this $1,000, I wouldn't recommend that you take this $1,000 into one trade. No. Some people say that you should only risk maybe 3-4% of your trading portfolio in every single trade. Maybe you can go up to as high as maybe 10% of your portfolio, which means, let's say you have $10,000 in your bank, you put $1,000 into a trading account. Out of these $1,000, for every single trade, never ever risk more than $100 of your equity. Now, the reaction that I got from my friend was, "But Carl, that sounds boring. How am I gonna make money from that? I want to make $1,000 per day. I want to become, I want to make money." And I'm very sorry to disappoint you guys, but trading is not something that's gonna make you rich tomorrow, or even within the next 6 months, most likely. It's just not trading is not really gonna make you rich like that. What it can do is it can increase your portfolio if you do it correctly, using proper risk management. So if you start out with $5,000, sure, there is a possibility that within 2-3 years you can make a whole lot of money with this trading. But I would suggest that you build up a big stack of cash with from an outside source, and that you have a daily income that comes from outside of trading. If trading is your one, if you just quit your job and you're gonna try trading, then, well, you're taking a big risk. And I would suggest having a job or having your own business, making a bunch of cash flow, letting the money flow in, and with this money you can trade, and you can make money. You can definitely make money. You can make $100 per day, $1,000 per day. I mean, set up your goal and you can go for it. It's up to you, really. But the risk management is a crucial part for everyone out there. Absolutely crucial. So now I'm going to tell you why. The obvious answer is, well, you don't want to lose your money, right? And if you have $10,000 and if that's your life savings, if you lose your $10,000, then you're screwed, right? Now you have to maybe work another year to make back the money, and you know, never ever ever risk more than you can comfortably afford to lose. That's very important, and the reason for that is because if you trade with $10,000, which is your entire account, you will be emotional, and this is just inevitable. You will be emotional because as a human being you are an emotional being. It's like embedded in our nature, and that's a big problem for a trader. As a trader and an investor, you have to cut off all emotions. You have to be zero emotional. Obviously you can never be zero, but you have to cut out as much of the emotion as possible. You have to act like a robot. So if you have $10,000 in the bank, if you lose $100, that doesn't matter, right? You're fine. Even if you lose $500, you're pretty much fine. That you could call that a bad losing streak, a bad week. You can start off next week and get back to trading. So this means that if you lose a trade, or let's say if you have a trade open of $100 worth, you're not going to be emotional, because you know that this trade is not going to make it or break it for you. You're not going to get rich from it, and you're not going to be bankrupt off of it. And this is exactly the state of mind that you need to be in, because this is going to let you execute your trades much better. This is going to make sure that you can stick to your strategy, because you also have to pick a strategy and then stick to the strategy. And it's going to be much easier when you stick to this risk management that I'm telling you right now. In poker, they call it bankroll management, and the exact same principle applies to poker. A poker player, let's say a poker player has $1 million in his PokerStars account. He would never ever enter into a tournament with a ticker price of $1 million, not even $100,000. He would go into smaller tournaments of maybe $10,000, $20,000 probably, right? Because you don't want to sit there and because if everything is on the line in this one hand in poker, then you might take the wrong decision, even if you have pocket aces, the best you can have. But if this other guy is sitting there, you have the situation will be hard to handle when everything is on the line, and you will take bad decisions. So, as a summary, guys, and this applies. It doesn't matter if you have $1,000, $1 million, or even $10 million. I know that some of you guys are trading with like $10 million out there, and I really hope that you are taking it really, really slow, really chill, and you don't risk. So let's say you have $1 million in your Bybit account. Don't risk more than I think 100,000 is way too much in a position. I would say in that case maybe maximum 50,000. So we're talking about like 5% in every single trade. I think that makes sense. And if you have $100,000, we're talking about $5,000 in every trade. Because it's all about the long term. It's not about how much money can you make this week. It's not about how much money can you make on this specific trade. No. It's about choosing your strategy wisely, executing it like a robot, and then looking into the future, the next 100, 200, 300 trades. You want to make sure that overall you are profitable, which means that you're gonna lose some trades, you're gonna win some trades. And even if you take a dice and roll a dice 10 times or even 100 times, there are gonna be a few streaks when you get sixes, maybe 5 times in a row, and some streaks when you get a 1 5-6 times in a row. So even if it's let's say 50-50 chance, like let's just say that you have a 50-50 chance of winning, you're still gonna have losing streaks and winning streaks purely based on the law of probabilities, which means that you have to have enough funds in your account to handle a losing streak. So let's say you have a losing streak of 5 trades. Well, if you risk 10% of your whole account, then you're losing 50% of your whole account after 5 losing trades. that is not very nice. So if you only risk 5%, then you're only losing a quarter, which is more manageable. But you will hear people say that it's even better to risk only maybe 2, 3, 4% of your trading portfolio. Personally, I try to stick under 10% at all times, and something like 5% in my opinion is just a reasonable place to be in. And if you blow up your account, which is likely going to happen, that happened to me a couple of times, it happened to honestly all the big traders. Even if you read Market Wizards, for example, a great book with I think 15 stories of 15 traders, if I remember correctly, almost all of them that are the best traders in the world now, almost all of them, they witness or they explain how they blew up their accounts in the beginning and how they learned from it. You have to learn from it, because it's kind of inevitable. It's a part of a trader's journey. When you go to school, you pay the tuition fee. When you become a trader, you pay the price of blowing up your account at least one or two times. You learn. And that's also why it's important to not risk more than you can afford to lose in your first trading steps, because the risk of losing your first trading account is very high. Very high. I did it. Many of my friends did it. It's part of the process. So that's why it's so important to at least when you're a beginner, don't just like a little bit, just put in a little bit. And yeah, I mean, leave a thumbs up right now if you agree with this, and also please leave a comment down below if you want more of these videos where I give you some trading strategies, some trading tips. I think it's a great opportunity to do so. Of course, I feel like I should share this information much more often, and yeah, if you have any good suggestions on the future videos that I can make for you guys, please leave your comments down below right now. Thank you guys for that. I really appreciate it. And yeah, if you can push this video to 10,000 likes, that would be incredible, guys. Absolutely incredible. So I think the summary for this video is, don't risk too much money. Be careful out there. Trading is a long-term thing. You're not going to get rich overnight. And if you do want to get rich overnight, do something else. Honestly, I don't think trading will be for you, because you will just lose your money. And losing money is not fun. You wanna see trading as something that is fun, and you wanna have fun with it. And you also have to decide if you want to be a swing trader or a day trader. I'm personally swing trading. It fits my schedule better because I don't have time to sit hours and hours in front of the computer to day trade. I prefer to put in a trade, and then I put in my stop loss, my take profit, and then I just let it be. And yeah, that's a better strategy for me. You go ahead and do whatever you want. But yeah, I mean, personally, I think that trading is, I mean, it's fun. If you can enjoy it, then it's a fun thing. So if you do want to switch platforms, which I would suggest you do if you are still not trading on Bybit. Bybit is by far the best exchange in crypto to trade Bitcoin, Ethereum, and other altcoins with leverage. So if you do want to trade, I would definitely suggest Bybit. The link is down below. Right now you can get a huge sign-up bonus simply for clicking my link. So go ahead and do that. And also, I have created the most popular Bybit tutorial in the history of humankind. It is over on my channel, so just go and watch it. And yeah, off topic. I am right now, like I said, flying to Sweden, and I'm sitting here in Emirates first class. Look at this, this is cool. I can open these doors here. It's very cool. And I had some great food, and the service is great. I love flying, actually. I really love flying. Even back in the days when I was flying economy, I still really enjoyed the whole process of flying and so on. And now I'm super fortunate, and I'm super grateful of the fact that I can travel like this now. Look at this, guys. I'm traveling like a king. I feel amazing about that. And every day I feel so grateful, and every time I travel I feel like it's a blessing. So I'm super happy about it. And thank you so much for being subscribed to my channel, guys. If you still didn't subscribe, please do that right now. I urge you to do it. I'm giving you great trade signals, trading advice, and education about Bitcoin. Because remember, Bitcoin is going to explode in the future. Bitcoin is going to be worth millions of dollars in the future. So that's why it's even more important not to risk your Bitcoin. But guys, this video is already getting too long. Thanks for watching. If you want to watch my Bybit tutorial, I will pop it right there, right now, and I will see you guys in the next video. Bye.